Good evening, everyone. This is Henry Gambell with simplertrading.com, and in tonight's free video, I wanted to look at a couple of ideas that revolve around a witching expiration. So we have monthly expiration every month, but the witching expirations only come around 4 times a year, and they can be kind of unique. Now, of course, this one is unique because we have the FOMC that's going to be due out on Wednesday, and we all know that there could be some sharp moves inside of that. At the end of the week, and when we're standing there on Friday afternoon, it's just trying to work with the idea that there will be a couple of names that tend to gravitate towards these big strike prices. So in the case of Netflix, it's a little interesting because it looks like it's maybe trying to get up above this big $300 area. But then if you come over and look at an options chain, you can see that there is a large amount of open interest in these $300 calls, which to me suggests that the funds that are generally selling these to the retail public have a vested interest in them expiring worthless. It doesn't mean that they will. Netflix could explode higher. But I like the idea of looking at either an unbalanced butterfly or an iron fly, something that takes advantage of Netflix sitting and chopping around 300 for the next 3 sessions. So if we have a big up move tomorrow, depending, right? You don't want it to be up at 315 or 320, but if you've got a little bit of a bid, I think you come in and try to do something with shorting those options. And I'll probably be doing it with defined risk, which will make it a lot easier to sit in as you get into Friday. If you understand those concepts, we can look at the exact same thing in EA, where I'm trying to do the same thing. I'm looking at this thinking, okay, it's been a little bit strong. It started today was perfect for these types of fills because it starts strong and then pulls back into the end of the session. So when it gaps up like this, you're trying to take advantage of shorting something. You can do this as a unbalanced butterfly, as shown here. You could also do it as a call credit spread, but you're just mainly trying to work with the idea that the short $100 call will stay out of the money. I like doing this as these types of flies because I have a little bit of cushion being long the 98. It's a little bit easier than if I was just straight up short the $100 call, and then you can see the same way of thinking at play. You've got almost 10,000 contracts in the $100 calls, and I'd like to see if those can expire worthless. This is one way to participate in that. So I hope that's helpful, gives you some ideas to think about as we head into this witching expiration. We'll see how those play out into Friday.